Welcome back to Investing Talk podcast. Today, we're going to kind of take a deep dive into this company, Atlas Lithium Corporation,
Right.
ticker symbol ATLX. You guys sent in some information about this company, and we're going to see what we can extract that's important for you to know right now without overwhelming you with information. So we've got their company overview, recent performance, financial health, potential strengths and weaknesses, market sentiment, competitive position, and future outlook.
Lots to cover.
Yeah, so let's get into this.
Well, one of the things that I found really interesting about Atlas Lithium is that they're focused on becoming a significant lithium producer, and they're doing this specifically in Brazil with their Nives project. And their strategy really revolves around developing these lithium reserves to meet the growing demand for batteries and EVs and renewable energy technologies. But a key element of their strategy is not just finding lithium,
Yep.
but also forming these strategic partnerships to really kind of make it all come together.
Yeah, it looks like they've secured some pretty big names. They've partnered with Mitsui and Chengxin Yahua. And so, it's not just about having access to the lithium itself, but also having that route to market and the financial backing to actually scale up their operations. What makes those particular partnerships so important for Atlas Lithium?
Well, I think the key here is that these aren't just any partners. Mitsui, for example, brings a wealth of global trading and logistics experience, which is absolutely essential for getting their product to market efficiently. And then on the other hand, you have Chengxin and Yahua. These are giants in the lithium processing and battery materials world. So their involvement not only brings a significant amount of capital to the table, but it also gives Atlas Lithium this incredible vote of confidence from established industry leaders. And I think ultimately these relationships help to de-risk their path to actually producing and selling lithium.
All right, so in terms of their recent performance, the information we have doesn't really give us up-to-the-minute stock price trends or anything like that. But I do find it interesting that analysts have price targets that range from $19 all the way up to $30, which suggests a pretty optimistic outlook from, the people who were supposed to be analyzing these companies.
Yeah, and something else is particularly noteworthy is the timing of some pretty pivotal events. So, for example, the arrival of their modular lithium processing plant in Brazil back on March 7th, 2025, looks like a real game changer. The fact that they fully own this plant and that it's designed to process up to 150,000 tons of lithium ore annually. That's a big step towards actually producing and generating revenue.
Right. And of course, that comes after they received their operational permit for the Nives project back in October of 2024. So it seems like they're really transitioning from purely exploration and development into really, getting that commercial production off the ground. And the arrival of that processing plant feels like a very physical manifestation of that transition.
Absolutely. And it raises the question of how the market is interpreting all of this.
Yeah.
The information we have suggests that the recent upward movement in their stock price is likely connected to the arrival of this plant.
Yeah.
Strategic partnerships we've talked about, and of course, the broader story of lithium demand increasing. It stands to reason that investors are looking at this and saying, okay, they're actually doing what they set out to do.
Right. They're executing on their part. Okay, so let's talk about their financial health. Now, we don't have, the most up-to-date quarterly or annual reports in front of us, but it is clear that these strategic investments and offtake agreements are playing a really significant role in kind of shoring up their financial position. We're talking about a $50 million commitment from Chengxin and Yahua and a $30 million investment from Mitsui in exchange for future lithium supplies. Can you explain what an offtake agreement is and why it's so important in this context?
Sure. An offtake agreement is essentially a pre-purchase agreement. So in this case, it means that Mitsui and others are saying, we're committing to buying a certain amount of lithium from you, Atlas Lithium, once you start producing. And this is a huge deal for a company like Atlas Lithium because it gives them a degree of certainty about their future revenue, and it can make it easier to get additional financing if they need it. So it's a real vote of confidence from the buyer in the seller's ability to deliver.
Okay, so while those agreements are a positive sign, what do the actual numbers, the financial metrics tell us about their current situation?
Well, looking at some of the figures we have, it paints a pretty typical picture of a company that's in this pre-production phase. So their latest trailing 12-month revenue was approximately $748,650. They have seen some recent increases, but still under $1 million annually. Their trailing 12-month earnings per share, or EPS, is negative, coming in at -$2.49, so they are currently operating at a loss. And their return on equity, or ROE, is significantly negative, which means they're not generating profits relative to the money invested by shareholders, and free cash flow has also consistently been negative.
All right, but Their debt-to-equity ratio is around 44.9%. For people who don't spend all day, looking at these kinds of numbers, what does it actually tell us about their financial structure?
So that ratio basically tells us how much of the company's financing comes from debt versus how much comes from shareholder equity. And at 44.9%, it suggests a moderate level of leverage. So while they do have some debt, it doesn't seem excessively high at this point,
Yeah.
especially considering that they are in a capital-intensive phase of developing their mining operations.
Yeah, so it sounds like their current financials are pretty much what you'd expect. For a company that's investing heavily to get production up and running, the real question is how these numbers will change once that plant is operational and they start making real sales.
Exactly.
So let's switch gears a bit and talk about what gives Atlas Lithium a potential edge. The information we have highlights that Brazil offers lower mining costs, which could position them as a really low-cost producer, which in the lithium market seems like a huge advantage.
Yeah, absolutely. Being a low-cost producer can be a significant advantage, especially in a commodity market like lithium where prices can fluctuate.
Hmm.
So if Atlas Lithium can achieve those low production costs, it gives them a buffer against price swings, and it helps them compete more effectively over the long haul. And of course, we've got to mention those strategic partnerships again. They're not just providing financial resources, they're also opening up those pathways to market.
Yeah, and I think it's worth highlighting their focus on ESG factors. They're really emphasizing their dry processing method, which avoids those big tailings dams. And they're committed to using renewable energy sources. And, in today's world, those kinds of environmental and social considerations can really be attractive to investors and customers.
It's a really important point. Their ESG focus isn't just about doing the right thing. It can also be a real differentiator in the market. More and more investors are looking for companies with strong ESG credentials. And customers like EV manufacturers who have their own sustainability goals, they might actually prefer suppliers who are aligned with those values. So this could really give Atlas Lithium a leg up, both in terms of attracting investors and securing those crucial sales contracts.
And it's interesting that they're located near BYD's operations in Brazil. That seems like it could be a logistical advantage.
Yeah, the proximity to BYD's operations is definitely a strategic plus. It could simplify logistics and open up potential supply opportunities.
They also have a stake in Atlas Critical Minerals, which gives them exposure to other materials like rare earths, titanium, graphite, and uranium. So even though that's through a separate entity, could that diversification provide some long-term benefits or maybe some added stability?
Absolutely. Having exposure to a diverse range of minerals,
Yeah.
even if it's through another company, can definitely provide upside potential and help to mitigate risk. It means they're not putting all their eggs in the lithium basket, so to speak.
And being an early mover in certain regions of Brazil, could that also be a source of competitive advantage?
Oh, for sure. Being one of the first to develop lithium resources in a particular area
Hmm.
can give you a huge head start. It lets you secure the best deposits and establish your infrastructure before anyone else shows up.
Okay, so now we got to talk about the other side of the coin. The potential downsides. What are some of the red flags or risks that we need to be aware of? We've already touched on this a little bit, but the fact that lithium prices can be volatile, that's a big one, right?
Absolutely. Commodity price volatility is always a risk in this kind of market. Lithium prices are driven by supply and demand, and those can change rapidly. So that could have a major impact on Atlas Lithium's revenue and profitability once they start producing and selling.
And there are those inherent technical risks that come with any mining project, like figuring out exactly how much lithium is there and what the quality is, and the possibility of cost overruns during the construction phase.
Yeah, those are certainly factors to consider. Accurately defining the size and quality of the lithium deposit is critical, and unexpected cost increases during construction can eat into profits.
And then there's the regulatory environment in Brazil. Could changes in the rules over there impact their operations?
Regulatory risk is always something to keep in mind when you're dealing with mining. Governments can change permitting processes, environmental regulations, or taxes, and all of that can affect a company's timelines and costs.
And we can't ignore the negative EPS, the negative free cash flow, and the significantly negative ROE.
You're right, those metrics highlight that Atlas Lithium is still in development. They're not profitable yet. Investors are going to want to see those numbers improve as they move towards production. And the high price-to-book ratio, around 3.10, well, that suggests that the market is already pricing in a lot of future growth. So if that growth doesn't materialize, it could lead to a drop in the stock price.
Okay, so overall, what's the market sentiment like? We saw those analyst price targets earlier. How does Atlas Lithium stack up against the competition?
Well, analyst sentiment seems to be generally positive. with that median price target of $24.50. And in terms of competition, Atlas Lithium is in a space with some big players, like Pilbara Minerals and other companies exploring lithium in Brazil. But their potential for low-cost operations because of those favorable conditions in Brazil, that's often cited as a key advantage.
Looking ahead, what are the key milestones or catalysts that investors should be watching for?
I think the most immediate catalyst is going to be the ramp-up of production at their new processing plant. Reaching consistent production volumes is going to be a big signal to the market. And then there's the potential for phase 2 expansion based on the results of their exploration efforts. That's another one to watch down the line.
But of course, those future prospects aren't without their own set of risks.
That's right. Regulatory changes in Brazil and continued volatility in lithium demand and prices. Those are still factors that could affect their performance.
So it seems like Atlas Lithium at ticker symbol ATLX could be a good option for investors who are looking to get into the lithium market, especially given their strategic partnerships and the potential for low-cost production in Brazil. But we got to remember the risks that come with commodity markets and the regulatory environment. Their current financials tell us they're still in the early stages of becoming a real producer. So thorough research is essential, and you really need to think about your own investment goals and risk tolerance.
One thing that I find particularly intriguing about Atlas Lithium is how they're positioned at this intersection of several trends. There's the huge demand for lithium, their strategic location in Brazil, and their emphasis on potentially sustainable production methods. But the journey from exploration to profitable production is rarely smooth sailing. So it really begs the question, how does a company like Atlas Lithium, with its growth potential, but also its inherent risks, fit into your overall investment strategy? We encourage you to dig deeper, look into their public filings, check out their management team's track record, and keep an eye on what's happening in the lithium market. Thanks for joining us on this deep dive into Atlas Lithium. If you found this discussion helpful, please consider subscribing, liking, and commenting. We'll see you next time.